What happens when a guy in a cat t-shirt, live streaming from his basement, accidentally starts a financial rebellion that costs Wall Street billions of dollars? That's the true story behind dumb money. Proof that sometimes the smallest investors can blow up the entire system just by refusing to sell, no matter how much pressure comes down on them to fold. Meet Keith Gill. Keith Gill works an ordinary day job while spending his evenings running a YouTube channel and blog focused on stock market analysis. His big thesis is on GameStop, a struggling retail chain selling video games and computer hardware, hit hard as more shoppers moved online and physical stores across the country kept closing. Most financial experts have written the company off entirely, and major hedge funds are aggressively shorting the stock, essentially betting on its collapse by borrowing shares, selling them, and planning to buy them back cheaper once the price craters, pocketing the difference. But Keith sees something the professionals are missing. New leadership and a wealthy investor buying up equity convince him GameStop is undervalued and primed for a turnaround few people are paying attention to. He tells his small but growing audience that the stock is far healthier than people assume, and that once the price starts climbing, every hedge fund shorting it will be forced to buy back shares at a loss, potentially triggering a massive rally. Convinced by his own research, Keith invests essentially all of his and his wife Caroline's savings into GameStop stock and options. A genuinely risky move that could wipe them out entirely or pay off enormously. Caroline is understandably nervous but stands by him anyway. Even Keith's brother Kevin, struggling financially himself, invests based on Keith's confidence in the trade. The other side of the trade. On the opposite side of this bet sits Gabe Plotkin, a hedge fund manager running a firm that manages enormous sums for wealthy clients. His fund is one of the biggest players shorting GameStop, utterly convinced the company is doomed. When he hears that an amateur investor like Keith has poured serious money into the stock, he dismisses him as a fool. Alongside Gabe, the film introduces two other major financial players, a hedge fund executive named Steve Cohen and Ken Griffin, who runs Citadel, a firm with an outsized influence across the entire market. Even in the middle of the pandemic, while ordinary people are struggling financially, all three of these firms continue posting strong profits. Meanwhile, several small investors are drawn into Keith's orbit. A single mother working as a nurse, barely keeping up with her mortgage, sees his videos as a possible way out of debt and invests what she can. A disillusioned GameStop employee, tired of getting blamed for low sales he has no control over, recognizes the changes happening at the company and invests too, partly hoping to strike back at a system that seems designed to crush people like him. Two college roommates buried in student loan debt make the same bet, hoping Keith's analysis might finally get them out from under their loans. All of them use an easy, commission-light trading app called Robinhood to buy in. The community behind the movement. Keith posts detailed updates daily, and a growing community gathers around an online forum called Wall Street Bets, where members discuss the market using irreverent, meme-heavy humor. Many of them are still bitter about the 2008 financial crisis, when big banks caused a collapse, got bailed out, and faced almost no consequences while ordinary people lost everything. To this community, shorting a struggling company like GameStop looks like the same predatory pattern playing out again, and buying the stock becomes as much about principle as profit, a way to punish hedge funds for betting against a company on the backs of small investors. The squeeze begins. Months later, GameStop stock price starts climbing, first gradually, then explosively, jumping from a couple of dollars to 50, then to 100, catching short sellers like Gabe completely off guard and forcing them to scramble for a response. Keith's own investment balloons from around $53,000 into the millions, and he shares the screenshots publicly, turning himself into something of a folk hero within the community almost overnight. The same small investors introduced earlier, the nurse, the GameStop employee, the two roommates, watch their modest investments grow enough to seriously change their financial situations for the first time in years. Gabe initially dismisses the rally as temporary hype and continues shorting the stock, a decision that proves disastrous. As GameStop climbs past $200, $300, then $400 a share, his fund starts hemorrhaging billions of dollars in what's known as a short squeeze, when a rising price forces short sellers to buy back shares at increasingly painful losses, which only pushes the price even higher in a feedback loop nobody can easily stop. Other hedge funds start backing out of their short positions too, accelerating the spiral, and GameStop's rally becomes a full-blown media sensation covered everywhere from cable news to social media. As Gabe's fund teeters toward collapse, his wife urges him to call in favors, and both Steve Cohen and Ken Griffin ultimately inject roughly $2 billion combined to keep his firm from going under entirely. Robinhood steps in. Meanwhile, Robinhood's founder receives an urgent call demanding a massive deposit with a clearing organization, since the surging value of shares purchased through the app has dramatically inflated the company's financial obligations, reportedly around $3 billion. Unable to meet that requirement, Robinhood makes the controversial decision to disable purchases of GameStop stock entirely, allowing only sales. Furious users, believing the platform they were promised was fair and open, accused the company of protecting hedge funds at their expense, and speculation swirls that Ken Griffin's ties to Robinhood through Citadel influenced the decision. With buying restricted, the stock price plummets from a peak above $400 down to around $140, wiping out gains for countless investors who'd been holding on. Robinhood's co-founder publicly denies any connection to Citadel, insisting the restriction was purely about meeting sudden capital requirements, not protecting hedge funds. Many small investors don't buy the explanation, feeling deeply betrayed by a platform that marketed itself as leveling the playing field. Keith's return. After staying silent through the chaos, Keith finally posts an update revealing he actually bought more GameStop shares as the price dropped, still convinced in the company's fundamentals. His refusal to sell, even during a painful downturn, only strengthens the community's trust in him, cementing his reputation as someone genuinely different from typical market players chasing quick profits. GameStop's price climbs again, causing renewed losses for the hedge funds still exposed, and the entire saga eventually escalates into a formal congressional hearing. The hearing, Keith, Gabe, Ken Griffin, and Robinhood's co-founder are all called to testify before a committee of lawmakers and financial experts. Keith calmly insists he did nothing wrong, describing himself as an ordinary investor simply sharing his honest analysis online, not a hedge fund manipulating anything. Gabe admits he underestimated the situation but defends short-selling generally as a legitimate business practice, downplaying the harm it can cause to everyday investors. Ken Griffin denies any involvement in GameStop itself, stating his firm never pressured Robinhood to restrict trading. Robinhood's founder reiterates that the trading halt was strictly about meeting sudden capital requirements, not favoritism toward any hedge fund. No formal ruling comes out of the hearing immediately, since investigations remain ongoing, but public opinion largely clears Citadel and Robinhood of direct wrongdoing, even as the reputational damage lingers. It later comes out that Ken Griffin's firm had quietly profited from GameStop's rise as well, despite his public denials of involvement, while Gabe's fund suffers losses so severe it effectively collapses. The aftermath. Keith eventually steps away from public posting and live streams entirely, but not before the small investors who followed his lead see real changes in their lives. The disillusioned GameStop employee finally saves enough to quit his job and pursue something new, something he'd wanted to do for years but never had the financial cushion to attempt. Not everyone becomes rich, but many manage to climb out of the financial holes that drew them to the stock in the first place, even if some challenges still linger afterward. A post-credit note reveals that on April 16, 2021, Keith conducted his final live stream, sharing a screenshot showing his GameStop position had grown to a net worth of $34 million. He then stepped back from the spotlight almost entirely, rarely appearing publicly again. But the movement he sparked didn't disappear. Members of the Wall Street Bets community continue watching for other heavily shorted stocks, banding together to support each other against the same kind of institutional betting that started this whole saga in the first place. At its core, this isn't really a story about GameStop at all. It's about what happens when ordinary people, dismissed as too small to matter, discover they can move markets simply by refusing to play by the old rules. So that's dumb money. What did you think about how it all played out? Let us know in the comments, and don't forget to subscribe for more breakdowns like this one. What made GameStop different from a typical market story wasn't just the money involved, it was how visible the whole thing became in real time. For years, retail investors had been treated as background noise, small players whose trades barely registered against institutional money moving billions at a time. Suddenly, a scattered group of amateurs coordinating in public forums had enough combined force to threaten multi-billion-dollar funds, and everyone could watch it happen live, screenshot by screenshot. It sparked a wave of copycat rallies in other heavily shorted stocks, as traders went looking for the next company hedge funds had bet too aggressively against.